Good morning and welcome to our last video for 2022. This week has been a big one for inflation data and for interest rate decisions, both of which have been big themes of this year. The latest inflation reading for the US came in at 7.1%, which was nicely below the 7.7% that we had in October. We've now had several months of inflation readings for the US showing a very clear downward trend. However, here in the UK, the latest reading came in at 10.7%, which was slightly below the 11.1% that we had in October, but it's still uncomfortably high. Here on this chart, we are comparing the inflation rates in the UK and the US going back to the start of 2020. You can see they were initially fairly similar. They then both rose quite sharply in 2021, but the US inflation has come down a lot since June, whereas the UK inflation has remained stubbornly high. The US has been a bit more aggressive in terms of raising its interest rates, and that will have contributed to bringing down that inflation rate. However, it's also true that the US is much more independent in terms of energy production, and therefore it will have been less impacted by the energy supply issues resulting from the situation in Russia and Ukraine. This week, the Federal Reserve, the Bank of England, and the European Central Bank all put interest rates up by 0.5%. Higher interest rates will slow down the economy, but the good news is that in the US, the previous 4 interest rate rises were all 0.75% each. So the fact that the latest interest rate rise is slightly smaller will give markets hope that we might be nearing peak interest rates. Also this week, the latest retail sales data for the UK was out. We've looked at this quite recently, but we thought it might be quite interesting to look at the updated data now that it includes the data for the Black Friday weekend. What's really disappointing is that retail sales for the UK dropped in November, despite the fact that the Black Friday weekend is normally a really big one for shopping. Here on this chart, we're looking at the value of retail sales in the green versus the volume in the pink. You can see that the value, i.e. the amount that people are spending, has actually gone up, whereas the amount that they're actually getting for their money is now less than it was in 2019. So this shows that consumers are really starting to struggle with the cost of living, and it means that investing in the retail sector is very difficult at the moment. And finally, the International Energy Agency has predicted that 2022 will be a record year for coal consumption, which is a great shame considering the amount of effort that has gone into reducing carbon emissions. Developing economies are still big users of coal, and many developed countries have had to bring old coal power stations back online because they haven't been able to get hold of enough gas because of the Russia-Ukraine situation. Here's the International Energy Agency's estimate of global coal consumption going out to 2025, broken down by country. You can see that most of the consumption is happening in China, shown by the pale blue section on that chart, followed by India, shown by that slightly darker blue section. We've also got this pie chart here which breaks down the energy supply of India. You can see that 44% of energy is still coming from coal, followed by oil at 25%. The good news is that India is building out its renewable capacity. This year it has begun auctioning off sites for offshore wind farms, but there is still a long way to go to get the carbon emissions down to acceptable levels. Moving on to have a look at next week, it's a very quiet one in the run-up to Christmas, but we are expecting results out from Nike. That's it from us. I hope you have a really good Christmas and New Year, and I look forward to seeing you in 2023.